wrecked on crypto taxes because it's an afterthought to them and they don't know the rules. And that $2,000 NFT that you forgot about in April landed you into a $20,000 headache in January. I'm Mike with CryptoEase, and in this video, I'm going to show you the exact amounts and percentages you need to know for 2025, even 26, coming for crypto taxes. This is an expanded guide that's going to cover the US, Canada, UK, and give you global considerations no matter where you are. Now, at the end of this video, I'm also going to give you the number one tax recorder and calculator that automatically takes care of all of your tax burden for you. And it's really going to simplify your crypto taxes. Plus, you're going to get $20 off just for sticking around. Now, why me? Well, I've been in crypto since May 2020. I've had to do one, two, three, four, almost five tax returns across Canada and the US because I moved using the calculator that I'm going to recommend to you, and also the techniques and methods and considerations. And so, what I want you to know is I started with $100 in Bitcoin in May 2020. Less than a year later, I had over $500,000 in crypto. That was my first crypto fortune. I did many others. And each time I have to worry about taxes. And I've done many wonderful things with crypto, but every single time I do something wonderful, I have to worry about crypto and tax and capital gains and all that stuff. But the good news is I've helped hundreds of people make 6 and 7 figures in crypto. I teach a crypto group. The first 89 members can get in free. There's still a chance to do that. But you know what? You don't have to join any more groups. I totally get it if you don't want to join. Take your questions to the comments and I'll follow up in my next video. So thanks for being here. At the same time, let me do a quick disclaimer. I am not a tax professional. I'm not a legal professional. I am not a financial advisor. I'm simply a cybersecurity engineer that has great luck in crypto, and I'm still sticking around today. So let's get started. Okay. What we want to look at is what are the universal principles that apply across the board. Generally speaking, taxable events are going to include selling, swapping crypto to crypto, spending crypto, and any earnings you get from staking, mining, or yield. And those are generally treated as income. So here's a nice visual for you. You can pause the screen and look at this right now if you like, or take a screen snippet. I am going to link the whole guide in the description for anybody. You don't have to be in my group. I'm going to do that for you. And non-taxable events would include buying crypto with cash, in other words, when you get in, and then transferring between your own wallets. But that's going to be a like-to-like transfer. And then also hodling. Another thing to watch out for is wrappers, and do wrappers affect things? Okay, let's move on. I got a 25-minute time limit with my Canva subscription. So here's a nice image for the non-taxable crypto events. Buying with cash, transferring between wallets, and hodling. And this could be your superpower, is hodling. Okay, so the action you want to consider right here in this section of the video is every single taxable event does have a timestamp, an amount, and a fiat value. Fiat meaning your local currency, US dollars, Canadian dollars, UK pounds, and so on, at the time that it happened. Now, the big deal is between centralized exchanges like Binance, Coinbase, Gemini, Kraken, and so on, versus DeFi wallets and decentralized finance, is that your wallet's already tracking it for you in both cases, just differently. And at the end of the year, you just need to download that, or your tax software is going to do that for you. All right, let's move on. First of all, we're going to hit the good old USA. Oh, shoot. Okay. And in the USA, we have to consider capital gains. So there's short-term capital gains and long-term capital gains. Now, long-term means, over a year. If you have short-term capital gains, meaning you have one of those events, that was a fly. If you have one of those events in less than 12 months, so you buy some of the crypto I have right now, I'm waiting for the bull run, I'm going to be selling short term. So I got to worry about ordinary income rate there, which could be between 10 to 37% on your ordinary income rate that you have to pay capital gains. Now, the good news is if you're a hodler and you hold on to your coins longer than 12 months, and usually we're going to do this with our blue chip assets like our Bitcoin, our Ethereum, our Solana, and so on. And if you hold that for longer than 12 months in the US, then you're only going to pay 0% if your income is up to 47,000 if you're single, or 94,000 if you're married filing jointly, or 15% up to half a million roughly. And so you can see the numbers right there. I kind of fall into that bracket, or 20% above those thresholds. And so that'd be staggered based on those amounts, meaning you're going to pay 0% under that 94,000 if you're married filing jointly. Then you're going to pay 15% on the amount from 94,000 up to 583,000, and 20% above that in this example. And again, pause the screen anytime you want to take a little screenshot or show your friends. Okay, what are income events in the USA? Staking, mining, airdrops, and yield. And these are taxed as ordinary income at fair market value when received. So you also want to make sure that you're using the right sources to report this, because if you execute your trades on, let's say, Coinbase, but you use Uniswap as your source of the trade reference, there can be slight differences between the rates that they provide those trades at. So keep an eye on that. But in the US, we have a huge, huge benefit. And that benefit is there's no crypto wash sale law yet. So, what is a crypto wash sale? Don't worry about the language. Basically, what it means is coming up on the end of the year, and you should be looking at this around December timeframe, is that if you have anything running at a loss, you can sell that at that loss and immediately rebuy it. So if you believe in your crypto, you can sell it at that loss, immediately rebuy it, and you can still claim the loss. That's pretty good. Okay, so that's a huge benefit for us in the US. Now let's take a look at Canada. And I lived in Canada a few years ago. Hmm, Excuse me, crypto runs on coffee. And in Canada, your crypto is treated as a commodity. Basically, it's a little bit simpler in Canada. They just want all your money. Sorry, not all your money. Only 50% of your total capital gains are taxable, and then it's at your marginal rate. Now, this is going to be appropriate for individuals, but this is different for companies. And check with your accountant and lawyer, tax lawyer about companies. But the example here is that if you were to sell 10,000 Bitcoin, then 5,000 of that is going to be treated as taxable, and that's going to be taxed at your income rate, whether you're an individual or a corporation. But again, those rates for individuals should be somewhere between 15% and 33% based on your tax brackets. Okay, what can be taxable? So staking, mining, and yield. Those are the big three. Um, and fully taxed at your marginal rate. Of course, sales, right? Sales of NFTs, that kind of thing. So one of the tips here is that Canada is very strict about your Canadian tracking. And I use this tool that I'm going to share with you at the end of the video to accurately log my Canadian equivalent at every transaction. Now, the reason that matters for Canadians is a lot of crypto is settled in US dollars, especially stable coins. Most of the stable coins out there are US dollars. There's very few Canadian stable coins. And so you need to be tracking your conversion rates and be aware of that. Okay. That's something that can get you tripped up. But your crypto tool, if you set it up properly, that's going to track it for you. Now, if you do have any questions about this, I'm just going to do a quick plug here for the group, is join us at the CryptoEase community. It's https://school.com, CryptoEase about. The link is in the bio anyways. Why am I hassling you with that? But, feel free to also ask your questions in the comments. There's no gatekeeping. I'll give you a full answer. Okay, now what about the UK? I've got a group member that just joined from the UK, and we love him. We talk about him a lot in our family. Actually, we're super excited about his career, and I'm not going to out him here, but hey James, this one is for you. So in the UK, I did live in the UK for a while, by the way, and I would have had to worry about these capital gains taxes if I was doing crypto at that time, but I was not. So apparently, in the UK, there is an annual exempt amount. Now it's $3,000 per individual, but if you're married, you can group those together for up to £6,000. Now, unfortunately, this is down from $12,300 a couple of years ago. And so just be aware of that. But beyond £3,000, it seems that the tax rates fall into a 10% basic rate band, and then beyond that 20%. And so here's a little graphic for you about that. The annual exempt amount is £3,000 per year, and then beyond that, you tax at 10 or 20%, depending on your income. And again, staking and mining, these are taxed at miscellaneous income based on your personal rate. But there's that tip. Oh, let me just hit enter to separate. Oh, I can't do that. Okay, we're in view mode. Oop, let's just do this. Spouses can transfer their assets tax free to double their allowance. And so that's, a bit of a gimme. But basically, we all got to pay the piper. Now, if you're anywhere else, and I have members that are in, Africa, Thailand, around the world, it's very exciting. In fact, myself being South African originally, is that every country treats crypto differently, just to complicate life. So, for example, Portugal historically has had no crypto tax. Meanwhile, a place like India, you get 30% flat tax, which is whew, ouch. And so, if you want to discuss, these different scenarios, or you want to get a custom plan, I do mention that at the end. But basically, from a universal perspective, we should all consider the following. And here's a nice, cool diagram for that one. Is number one, track everything. But everything is tracked for you, whether centralized or decentralized. Get into that in a minute. And then always separate out distinction, make a distinction between what is income versus capital, because the capital that you put in, you're allowed to get out. Okay. So if you invest 20,000 and that goes up to 100,000, your capital gain is going to be on the 80,000. You with me there? You're allowed to get your capital out that you put in. Also, leverage the allowances that you have depending on the country you're in. Research locally for that, or reach out to a local accountant. And that's the hey, number four, consult your local expert. So the beauty is that with tools like AI and comprehensive research tools, like I love Abacus AI and I recommend it to my group for research, is that you can get a lot of the way without needing to get a local expert. I'm not saying, hey, don't hire local experts. Definitely do that before you send things off or if you have any questions. But I have, between AI and Koinly and our very expensive but wonderfully professional accountants, I get all my questions answered and make sure that I'm getting the maximum back, but also being compliant. Okay, let's move on here to tools and why tracking is easy in DeFi. Let's compare centralized versus decentralized record keeping. Number one, on a centralized exchange, that's your Coinbase, your Binance, and so on, they will provide you year-end CSV reports and they do pre-log those transactions. But in my experience, the challenges come in when they decide to change their rules or how they report different complicated tokens. Now, some complicated tokens could be a wrap token. That's where you take, let's say, for example, Ethereum, and you wrap that up to be able to use that in other DeFi situations. We call that wrapped ETH. And then there's different LSTs, sorry, liquid staking tokens around Ethereum. And this can really confuse things. And you really are tied down to your exchange and how they recognize those. So stay up to date on those. Make sure that you're getting emailed their latest updates. The beauty of DeFi and decentralized finance is because all of your records are on the blockchain. All of my records since I started are on the blockchain. You can go look them up if you know my wallets. Now, that's up to you to share if you want to share your wallet with anyone. But there's no lost receipts. Everything is there to see. The challenge does come in sometimes with those tools, whether it's Coinly or any of the others that I recommend, is are they up to date on what the latest names of liquidity pairs are? And so sometimes when you do liquidity provisioning to earn yield, you'll put in, let's say, some Ethereum, you'll put in some USDC stablecoin, and they join those together, let's say on Curve, and then you might go and put those somewhere else like Beefy. Watch my other videos for all of this stuff. I don't want to get too detailed here, but the naming of those tokens can be a challenge for these platforms. Make sure they're updated, make sure that your stuff is getting tracked properly, or reach out to their support. Okay. So that's, and here's the, so detailed for a video, but this is the detailed evaluation between centralized and decentralized. And the real thing I want to highlight here is DeFi is actually more reliable for your record keeping because it's all on chain. Those records are immutable. They can never be changed. They're always going to be there. And so you can always go back, even if you change your tax software. If you don't like my tax software recommendation and you want to go to another one, you can go ahead and re-import all of that stuff, but you might have to do some extra work each time when you need to report some of those tokens that have been that don't have those updated names properly. Anyways, if you don't get that, don't worry about it. Add questions in the comments when it comes tax time, or just go ahead and join my group. It's free for the first 89 members. All right, so here's the secret. My recommended tool is Koinly. Now, In some cases, it does come down to personal preference. I have a beautiful link below. It's a referral link. It helps to support my channel. But if you use my link, you are going to get $20 off your first time. I also get $20 off of my Koinly account, and that helps me report all of the CryptoEase test wallets that I use in all my videos. Some others to mention is CoinTracker. One of my trading buddies is big on CoinTracker, but that is it's always felt like it's a lot more detailed, a lot more hands-on. Accounting, I don't know, tax, but I don't know. AI said those are equivalents. Check them out. But I know Koinly, and that's worked really well for me. My wife knows I put a lot of effort into Koinly over the years. But we've had the benefits of crypto. We've done amazing things with crypto. So don't let all of this get you down. This is just part of compliance, okay? And so here's my outro call to action is like the playbook is know your allowances for the country that you're in, track every transaction. On the centralized ones, make sure you download those regularly, okay? So that when they change the rules, you don't get lost out and you don't have copies. I've been in that situation before. It can be a real pain in the butt. Beauty is, remember, decentralized, everything is on chain. You're never going to be at a loss for getting those records back. And then use a tool like Koinly to automate it. If you don't use a tool to automate this, you're going to spend thousands of dollars potentially with your accountants or thousands of hours of frustration on your own part. You don't want that. So just stay compliant. Okay. Or move to a tax free country like Thailand. Some of my members are in Thailand. But you know what? At the end of the day, taxes are just compliance. The real wealth comes from automation and yield and setting yourself up to earn crypto hands off. I teach you that in my group. If you want a personalized blueprint of how to grow your DeFi cash flow safely, go ahead and join the group. I do that every day for my members. The link is in bio. Otherwise, put those questions in the group. If you've enjoyed this video, then I think you're actually really going to enjoy this other video as well. Boop, boop, right here. And so, I love you guys. Thanks for showing up and watching this video and supporting me. Please go ahead and like, comment, add anything in the comments as long as it's decent. And that helps my engagement with YouTube. Ask your questions. And I'd love to see you in the group if you have the opportunity to check it out. And feel free to give me any feedback on my videos. What do you like? What don't you like? And what would you like to see in future? Otherwise, I wish you a blessed day. It is September the 3rd, and enjoy the bull run that's happening now.